Hey, how's it going, guys? Benny Childs, founder of the Teach Me to Fish Effects trading community, and I am back with another midweek market forecast slash review. And we're going to take a look to see how the market has and is currently performing. This is for Wednesday, March 30th, 2022, going into Thursday, March 31st, 2022. All right, taking a look at the Dixie, we forecasted that the short-term institutional bias is long for this pair. This faded yellow line is the start of the week here on the 4-hour chart. And we started out inside of institutional distribution, and we can see the market open up and rallied up and then started to distribute off. We are currently inside of this 4-hour demand here, looking for or waiting for confirmation to take this trade possibly to the upside to fill in these candle imbalances here. All right, we're going to remove these demand zones here. Let's remove this one, and you can see here that we had a nice touch on this one for a turncoat or flip zone trade. Let's see. Here we go. Scrap that one. I don't know if I'll do this for every single one, but it did break, come back, retested the zone as a flip zone before distributing off. So we're now sitting here. We had liquidity here that was taken out, imbalance that was filled here. So definitely have reason to see this pair push up, possibly to fill imbalance here. Let's go ahead and throw that in for you guys so you can see that for my visual viewers. All right, imbalance that could be filled here, as well as anywhere up in here. Okay. All right, and so the Dixie again could be fulfilling that short-term institutional bias here in the midweek status. Okay. Just be careful, because this could continue to distribute off into more demand and imbalance, as well as seeking for liquidity from the retail traders. Okay. Aussie USD. I'm going to move on to Aussie USD. Let me get rid of this. That one. All right. Short-term institutional bias for this was short, is what we forecasted. We did start out inside of institutional distribution, as well as coming off of a 4-hour demand zone, where we've pretty much been just kind of consolidating in between this 4-hour supply and this 4-hour demand here. This 4-hour demand has been taken out, so let's go ahead and get rid of that. And so we could be seeing the fulfillment of the fulfillment of the short-term institutional bias to the short side. I would possibly be looking for imbalance to be filled, as well as taking it at least to this demand area here. So you guys could go ahead and look for your confirmation signals to get in, whatever that may be for you. Okay. And again, like I said, look to take this down to excuse me, we could be looking at this market to take out liquidity here. All right, as well as filling in these gaps. Now this is a mitigated demand zone. However, we do have an unmitigated demand zone here. Again, we could see AUD fall off into that to test here. Keep in mind, we definitely have liquidity here that the market could go and take out, as well as reason to fill in candlestick imbalance. All the while taking out demand zones or filling in orders here. Okay. I don't know if I ever mentioned this to you guys in any of my videos, but these demand and supply zones, the purpose for these are twofold. Okay. It is the fulfilling of orders as well as the closing of orders. Okay. Most institutions, they hedge. So oftentimes they sell, okay, and then buy, creating demand zones, and we'll see them come back to this zone to break even on the sales and fulfill buy orders, or they will buy to sell and come back into the zone to break even on the buy orders and fulfill the rest of the sell orders. Okay, it's pretty much how supply and demand works on the institutional side. Okay, and for us, it doesn't matter. We just want to be on the same side as them. Okay, and oftentimes we will get the demand and supply zones. For instance, here, this wick here, let's highlight this. This wick here, it pushes up through our demand zone here, excuse me, supply zone, which is represented by this 100% retracement of the Fibonacci that I use to mark out my supply and demand zones. but it pushes through here, taking out liquidity of any sell stops by retail traders. All right, it's just a little bit of a manipulation to push through and to take out the sell stop losses, as well as triggering any retail buy stops that may be here. Okay, so taking that out here, and we can see where they did not take out this high. All right, but we know that anyone who caught this on the sell has their stop losses sitting here. Okay, if they have not put it to break even or put the stop loss in profit. Okay, so that's pretty much how that works, and oftentimes that's why you will see that. Okay, just to kind of push through. But again, for me, this is the taking out of this supply zone here and creating new supply here. And you can see where this supply has been respected and pushed down and even come back to mitigate. All right, and because that is mitigated, that creates a new supply. Okay, for me, that has not been mitigated, and this is what I would consider a transitional zone, because technically price action has not finished to consider this to be a supply zone for some, but because I'm able to eyeball this in transition, this is very much what I'm trying to say is a legitimate area to be considered for 4-hour demand that we can see price come back to mitigate and then push off. Okay, all right. Anyway, I'm just kind of sharing with you guys what it is that I'm looking at whenever I trade. I call this traditional supply and demand zones with my flair of what I deem transitional supply and demand zones. And oftentimes this is how I can catch quick scalps in the market, catch these zones way before other traders would catch these zones, because they have not fulfilled their traditional definition of a supply and demand zone. Do this all the time with the S&P 500. That's why you can see past videos catching these scalps and just riding the market. But anyway, guys, again, let's get back to it. The short term institutional bias for this Aussie USD pair was short. Okay, we have been just kind of sitting inside of institutional distribution. Okay, and we kind of see where the market may be pushing off or pushing out. And again, we definitely have reason for this market to push out. We have liquidity, we have imbalance to be filled, as well as demand zones to be mitigated. Okay, orders to be filled, orders to be closed out as break even, more liquidity, more imbalance. So we definitely can see reason for this market to continue down. Okay, but we can also have reason for this market to push up. Okay, but anyway, so not a lot of movement. You know, if you guys can see this faded, this faded horizontal line here, but this is the start of the week for me on the 4-hour chart. So not a lot of movement in between here. Maybe on the lower time frame, we've been able to get in on some scalps, or you may have been able to get in on some scalps going down and up. But again, we're looking to see if we can get on the side of the institutions to distribute lower. Okay, so again, this pair has not moved much. It's moved, but as far as trending, it has not really trended for us. Okay, so just be on the lookout. We could possibly see this pair pushing down more. We had a push down here. Imbalance was filled, as well as new demand, new transitional demand respected. Okay, we may be finally seeing that push out that we're looking for. Okay, pound USD short-term institutional bias for this was short. Here is the start of the week here, and we pretty much came out of the gate pushing down, okay, as well as coming back to fill imbalance here. This 4-hour demand has already been mitigated, as well as 4-hour supply has already been mitigated. Okay, this 4-hour demand here has pretty much been mitigated as well. We see where it was pushed through. Okay, we saw this 4-hour supply respected here for about 8 hours, especially on the lower time frames. You could have caught that here. Really no flip zone trades that could have been taken. So we'll get rid of that one there. We did have a 4-hour supply here that was created. Okay, we see where price moved out of that zone. It did come back to mitigate some orders, and now it's pushing out. Okay, so this pair, pound USD, we may see some volume pop in here with these high impact news scheduled to come out tomorrow, one at 1 a.m., one at 5 a.m. We have some more on April 1st, so we could definitely see this pair, possibly see this pair push down into this institutional accumulation zone, possibly coming into this unmitigated 4-hour demand zone, and then probably see the institutions push back up if they don't have reason to or interest to go lower, which there are more institutional accumulations here. Okay, all right, so that is pound USD. Okay, you can definitely see the possibility of that's already been mitigated. Definitely can see the possibility of this transitional demand zone may come back up here and be mitigated. This is, I have an alert here for another type of zone. So yeah, I'm definitely looking for this pair to come back up here and sell off. All right, just waiting on a confirmation for that. All right, I'm going to try to hurry along, guys. USD Cad, I'm going to try to hurry along. You guys pretty much have the gist of what it is that I'm looking at. USD Cad opened up here. Short-term institutional bias was long on this. It started out long. It has pushed down, mitigated, and taken out this 4-hour demand here. Okay, this 4-hour supply has been taken out, as well as this one here, and this transitional 4-hour has been respected. Okay, it's already been mitigated, but it has been respected, and now we're looking for this pair to push up. Okay, and more than likely it will, or it has pushed up from this transitional demand right here. Okay, and so we could wait for this transitional demand to come back to be mitigated, and then see this market push up somewhere into any of these target points here, or target areas of interest, or we could simply see it come down more and test off of this 4-hour demand, or this institutional accumulation right here. All right, so we just kind of gotta watch it. Do have imbalance here that the market could come back to fill, as well as mitigate any orders here. Now this transitional demand zone has been mitigated. Okay, why? Because we see the open of here. Let's do it like this. Change that. Maybe a blue. You guys can see that. We do have the open of this 4-hour candle, which the low came down and actually mitigated inside of this demand zone right here. Now we can, let's see, yeah, even this lower time frame demand zone has been mitigated. So yeah, we may be seeing this pair just push on up, guys. USD Cad, we possibly could be seeing this pair push up a little further, and maybe be traded off of maybe lower time frame lower time frame supply here, or just keep going a little further. So as far as the 4-hour chart, USD Cad, I would have to wait to see how more of the price action develops before getting in, or look at some other lower time frame confirmation type entries, or transitional entries to get in. We have definitely seen this liquidity that was created here. We saw it, or we see that it has been here. Let's grab this, let's take this out. We can definitely see where it has been taken and then pushed up off of lower time frame demand. So again, like I said, this could be the push up that we're looking for, and we could see maybe a slight pullback to close out imbalance, to close out imbalance and see this push off in favor of the primary US dollar here. Okay, so just be on the lookout for that. We could already have our move to push up higher. Okay. Euro USD. All right, short-term institutional bias that we gave was consolidation, and I do distinctly remember saying that, hey, we could possibly see this pair open up, push up somewhere into this big old institutional distribution, and maybe consolidate between the institutional distribution and accumulation, or these 4 hours. So the market came and pushed up, okay, off of this 4-hour demand, okay, taking it out and creating more demand. And so we could do that because this has not been mitigated. We really have not gotten a flip zone trade off of this. All right, it may not come down to this 4-hour demand because this is a doji, and technically whenever you do supply and demand zones, dojis, you typically take the whole of the candle, okay, and then plus we do have imbalance, but I will tell you that a lot of times we do get manipulation, okay, and I like to come here to the meat of the doji, okay, and maybe catch that manipulation down here before pushing up, okay. So we will set that here, and it may be a trade that I miss out on, all right, but the market provides multiple opportunities. So if we don't get the manipulation and I don't get this buy trade, then so be it. All right, but we could possibly be looking for some confirmation to go ahead and take this down, but I think more than likely we'll get a push up into the meat of this doji before pushing off, and we may see that inside of the high impact and mid impact news events for this pair. All right, USD Jpy, we opened up with the short-term institutional bias to buy this pair. All right, and so from the onset, it pushed up, cleared out 4-hour supply here, okay, pushed into institutional distribution where there was a 4-hour supply zone nested inside of here. It was respected and pushed right off, okay. We did, no, that was not unmitigated. Let's see. Yeah, none of this has been mitigated. All right, but we do have a transitional demand. And guys, if you start hearing transitional demand and transitional supply and demand zone strategy, you heard it here first. No one else has been talking about this. I don't know if they've discovered it or not, but I mean, anyway, we do have this transitional demand. Okay, we did have the partial filling of this imbalance here, and now we kind of have a push in the form of a doji, which this candle could be closing out here in the next a little over 30 minutes right now. So we could see a pushback up, for this pair, or maybe a continuation of this push down. Okay, so we could have had the fulfillment of the short-term institutional bias, and now they're retelling the head and shoulders here, to go ahead and start taking this market down. So next week, the USD Jpy short-term institutional bias may be short, but it just depends on how the rest of this plays out. We do have a mitigated 4-hour demand, 4-hour supply right here. Okay, that we could see it push through, manipulate, and then push down, showing that nice head and shoulders or quasi retail formation, if you will. So just kind of got to see how this pair plays out, and possibly drop down to the lower time frames to get in with our trades. Okay, USD Swiss short-term institutional bias was long. It opened up, it did push long. Okay, pushed through this 4-hour demand, gave us a little bit of a flip zone trade before manipulating and distributing off. So let's go ahead and get rid of this zone here. Let's get rid of this demand zone, which actually turned out to be a flip zone trade right here. I think, okay. Selected the wrong one. Okay, it's not gonna flip for me, but we did get a flip zone trade that pushed off into this institutional accumulation. Okay, here where we're kind of getting a little bit of a reaction. I would love to see this push down into this 4-hour demand, and maybe taking that trade to the upside. Okay, if this is not the fulfillment of the institutional bias of this pair going long. Okay, all right. So again, we are sitting in institutional accumulation, so you guys be on the lookout for confirmation to take this pair higher. We do have high impact news coming out tomorrow at 5 a.m. And so we may get that push down into this 4-hour demand, or we may get that push up. But you guys just wait for your confirmation, okay? USD Mexican Peso, short-term institutional bias for this was long. All right, we see where price opened up. It did go long before distributing off here, taking out this 4-hour demand. Okay, this institutional accumulation zone has been taken out, as well as this 4-hour. This 4-hour here demand zone, leaving. I'm gonna take it from the doji, but leaving this 4-hour transitional demand zone right here. Okay, all right. So we could be seeing that short-term institutional bias being fulfilled here, and maybe push up to fill in the imbalance, or push up and mitigate this 4-hour supply. So you would just have to be on the lookout for any transitional confirmations that you can possibly get into and take this trade up higher. We do have a 4-hour transitional supply right here. Okay, and so to be honest with you guys, you would want, we would want, I'm sorry, I grabbed the wrong thing, but we will want this 4-hour supply to be taken out, retested, okay, as a flip zone, and then wait for confirmation to take this trade up here, okay, just to be on the safe side, okay. So that is technically what I'll be looking for. If not, we may get a test of this 4-hour demand right here, okay. And then, take this pair up. All right, so that's USD, Mexican Peso, NZD, USD. Okay, we opened up short-term institutional bias was short. You can see here the market opened up and it did go short, respecting this 4-hour demand, pushing up, taking out these highs, which is pretty much liquidity. Okay, pretty much liquidity. All right, took out the liquidity, came into this 4-hour demand, mitigated these orders, and now it's pushing off, where we possibly may see the fulfilling of imbalance. This demand zone has already been mitigated. All right, this demand zone has already been mitigated as well. Now, again, just because the zone has been mitigated, that does not mean that all of the buy or institutional buy orders have been filled, or all of the institutional sell orders have been closed out, because it could come back and push up even more. Okay, I know I didn't do this on the other pairs, but we can see where we're currently, on an uptrend, and based on traditional market structure definition, all right, this low that was created, it was strong enough to take out these highs, right? So we could see this market push up higher, all right, especially with this demand zone already being mitigated. All right, so we could see this market, come down, maybe give us a 61.8 trade, or a 78.6 type trade, which, on the lower time frame, maybe, some demand zone that we could see this push up. But then again, we did have this liquidity being mitigated, as well as this 4-hour demand, where we could see this market, push down even further. But only time will tell. But at this point, I would just wait to see if we possibly get a pullback to take this NZD USD pair down even further. Excuse me, down even further. So that's NZD USD. All right, guys, let's take a look at Bitcoin. Okay, short-term institutional bias was short. All right, we see where the market opened up here, and it went long, taking out 4-hour supply, coming into institutional distribution. So I'm looking to take some sell trades off of this. You can kind of see where price has just been breaking down here. So I'm looking to take personally take some sell trades, some sell scalps. I'm not trying to necessarily hold it too long, but looking to take some sell scalps, maybe down into this 4-hour unmitigated demand zone, and possibly seeing the fulfillment of this 4-hour candle gap. Okay, so just waiting for confirmation here on this pair before making my decision. All right, gold, short-term institutional buys for this at the onset of the market was to take this short, and it did just that. It came in, took out this 4-hour demand, bounced off of this institutional accumulation again, which this pair, it has mitigated the institutional accumulation quite a few times, and it may not hold up any longer. All right, we had a 4-hour supply, okay, that has been mitigated, and so we could be seeing this pair push off of there, taking out this institutional demand, and maybe seeing gold tap into this institutional accumulation. I said institutional demand, but it's accumulation, but it's just what I call my institutional zones. Okay, accumulation and distribution are my institutional zones, but essentially, guys, they still are demand and supply zones. Okay, so yeah, nice little head and shoulders pattern here. Left shoulder, head, right shoulder. Okay, again, we can see this to go ahead and push off for a little while before pushing back up here. Let's see, and that should be unmitigated. Yeah, that's unmitigated. I can definitely see this going ahead, being taken out, and gold coming down to this institutional accumulation here, which is the 1834.65 or $1,834.65 accumulation zone being mitigated. You heard it here first. All right, so yeah, you just want to see if you have confirmation and go ahead and take this pair down to the downside. Okay, definitely be looking to take this pair to the downside. All right, silver, we gave the short-term institutional buyers to go short from the onset of the market. It broke down, gave us a flip zone trade here. Market came out, came back, mitigated it as a flip zone, traded off. This demand zone was removed, got a decent flip zone trade off of it. Okay, in the process, again, demand has been taken out. 4-hour demand, guys, has been taken out. This 4-hour demand has been respected. We're sitting inside of institutional accumulation here. All right, which, you know, we kind of got that bounce off of here, the respecting of that. But again, we do have this retail formation of this head and shoulders here, and so we can definitely see silver possibly coming in, mitigating 4-hour demand, taking it out, mitigating 4-hour demand, taking it out, mitigating 4-hour demand, taking it out. Maybe we get a strong push off the equilibrium of this institutional accumulation, push up, give us a trade off of here, or we definitely have unmitigated 4-hour demand nested inside of this institutional accumulation that we can see silver go down further before pushing up. But in this case, let's see what type of retracement did we get off of this one. Move here off of this leg. Let's go to our Fibonacci trading. Pretty much 61.8, close to a 61.8 here. Yeah, so close to a 61.8 here. We definitely have imbalance to be filled. The market may just leave that alone and then catch it, fill it in on the buy orders. So I'll definitely be looking to take this pair short. If you guys trade silver, and guys, remember this. You got to think outside of Forex. Think beyond Forex. All right, we're talking about metals here. All right, so good places here. These zones are good places to, hey, if you have silver, sitting inside demand, you get confirmation, go ahead and sell it, because that is going to be, I'm talking about physical silver, that is going to be a good time to get good pricing off of it. And then on the flip side, guys, when it's sitting in demand and institutional accumulation, you get confirmation, okay, now this is a good time to go and physically buy metal, silver, and gold, add to your collection, add to your portfolio, add to your wealth. All right, so just again, think outside of Forex, guys. Think outside of Forex. All right, I'm gonna get off my soapbox, but this is how we obtain wealth. All right, you gotta think outside of Forex. But anyway, so I'll be looking as far as trading it, on the Forex side, I'll be looking to trade this going down, possibly looking into my formula for confirmation to go ahead and take this further down. But again, we do have retail formation of a head and shoulders, respecting institutional distribution. All right, with more and more reason for us to break down even further into this institutional accumulation that has nested 4-hour demand in it. Okay, U.S. oil. Short-term institutional bias for U.S. oil from the onset was short. We do see it opened up short, taking out this transitional demand that was here, gave us a nice flip zone trade, and it's pushing lower. I definitely want to see U.S. oil go down, guys. Anyway, I think we all have a personal interest to see this go down even further, unless you own some barrels of oil. Yeah, so we can see where it pushed down, gave us a little bit of a retracement, and it's pushing down more. It is taking out this demand here, leaving behind 4-hour supply. Okay, so we may see a push up, okay, filling in the gap, mitigating the 4-hour, or we may see it come down even more into unmitigated 4-hour demand before pushing up. Maybe next week we may see the prices of oil go back up. It really it depends, guys. So you just want to wait for your confirmation trades. Again, this is going lower, is taking out demand, here, taking out transitional demand, pushing down to more demand, liquidity being taken out, because that's what that's what was formed here. More liquidity here to be taken out. Okay. Institutional accumulation, nested 4-hour demand. So even on the fundamental side, guys, it makes sense for the US oil to come down more, to make society feel better, to feel like things are getting back on track. So yeah, I'm gonna be looking to take this short. There's just so many reasons to go short. We're not yet near reason to take this pair up higher just yet, as far as a technical analysis. Now, could something fundamentally come out and push prices higher, and no type of demand zones are being mitigated? Yes, that is very possible. But as far as the technical aspect, I see reason to go ahead and take this pair more to the downside, to get in on some sales, of course, waiting for confirmation to the downside. All right, SPX 500. Guys, I am doing a small personal challenge, and I've been killing it. Okay, but on the onset, the short-term institutional bias was sell. I think I remember talking about, hey, these supplies, 4-hour supplies, we probably can see them being taken out, and maybe price coming up a little further, maybe into more 4-hour supply before we see this push down. So we did have a strong move up. All right, taking out this 4-hour supply, but we may be getting a flip zone trade here. All right, I would have to check on some confirmation, but we may be getting a flip zone trade up into more 4-hour demand, and so we're probably gonna see this maybe taper off, or start to actually distribute more towards the end of the week, which is, we pretty much have 2 more days. This institutional distribution has been taken out again, as well as this 4-hour demand. It has been taken out. So I'm gonna update this institutional zone, but the meantime, in between time, guys, we do have this transitional demand right here that we could see this pair trade off of and push up, okay, into some of these supply or institutional distribution before we go ahead and see that tapering off, or that distribution of this pair. So only time will tell. All right. So all right, guys, so that is going to be the midweek market review, if you will. I just want to remind you guys that if you're not a subscriber yet, I really feel that it would be an honor for you to subscribe. If you want to be a part of the mentorship community, feel free to join. I am still working some things out, but the mentorship community is where you get my areas of interest, okay, as well as a full breakdown into how I see the market. Yes, we talk about imbalance and liquidity and supply and demand and order blocks and all those things, as well as some other developments that I am coming up with and getting ready to release to the mentorship community that is going to by far really help our trading. So feel free to join, feel free to subscribe, and please comment below, guys, on what you think about this mid-week review. All right, do you follow me? Do you don't agree? Let me know. Let's have a conversation. All right, so until next time, guys, always remember, if you stay in God, you will stay in control. Happy pip fishing, and always wait for confirmation. All right, guys, until next time. Bye-bye.